Khoon Goh joins us now. He's head of Asia Research, ANZ Research. Very good morning to you from where we're sitting, Mr. Goh. Thank you so much for joining us and pleasure speaking with you. Just trying to understand how the jobs data in the US will be seen going forward, and this interpretation that the Fed has managed a soft landing, hence at least US markets will stay steadily upwards. Is that the right way to look at it?
I believe so. I think there were a lot of concerns about a potential hard landing, particularly when the unemployment rate was heading higher and it triggered the so-called sham rule. But since then, we've seen the unemployment rate fall back towards 4.1%, as you mentioned, plus the monthly non-farm payrolls number continue with these outsized gains. It's very hard to see the US economy going into recession when you have such a strong labor market. So therefore, the hard landing concerns have faded away. And it very much looks like the US economy is heading for a soft landing. Now, importantly, this doesn't mean the Fed will hold off cutting rates. And this is really crucial because it's really the lower inflation numbers that is giving the Fed cover to ease rates and bring them back towards neutral. And whilst we don't expect the Fed to go big again like they did last month, but we're looking at more incremental 25 basis point cuts from here until we get the Fed funds rate towards 3.5%.
Khoon, hi, good morning. It's also Samina joining in. FIs have been underweight India for most part of this year. Now it seems incremental money is moving into China. How does India stack up for a foreign investor like yourself?
Look, the India macro story is still very, very positive from a long-term perspective. But, we have to acknowledge the Indian equity market had a very good run, particularly when China and the Chinese economic outlook was under a cloud. So we've seen a lot of inflows having gone into India, not only on the equity side, but importantly on the bond side as well, due to index inclusion. Now, we're starting to see interest returning to China, particularly around the equity market because of the stimulus measures that was announced 2 weeks ago. And the strong rally in the Chinese equity market, coupled with low valuations and basically the world being underweight China, is starting to see a bit of that rotation happening right now. Now, there's still a lot of uncertainty, I would say maybe skepticism on some part around whether or not the Chinese stimulus measures this time will really move the needle. But I think investors at this stage are at least giving the Chinese authorities the benefit of the doubt. So we might start to see some allocation of funds back into China. Some of that might come from other parts of the region, including India. But this is a short-term cyclical type of rotation. I think we shouldn't lose sight of the fact that over the longer term, I think the structural story for India continues to stack up very positively.
Recommending investors to buy India right now because, like you said, it's a structural long-term story. And the fact remains that we've sold off quite sharply. While the index is only down 5% last week, broader market stocks are down anywhere in the range of 20 to 30% from their recent peak. So if you look at rupee buy values, you'd get a lot more right now. So if you believe it, will you sell it?
Well, I think the rupee is a completely different story because we continue to see the RBI managing the currency very closely. So that's not going to be the main bulk of where the gains are.
What I meant
in terms
is,
of the equity market, I think valuations do play an important point. And as I said, everything is relative. And at the moment, there's a lot more excitement, I guess, in the near term in terms of what's going on in China. So we might start to see, China taking some of the glamour for the near term, shall I say, until we see, where this rally in the Chinese equity market ends up.
Yeah. Khoon, just in terms of the outlook for India, you said that the long-term story remains positive. What we're seeing in terms of the move towards China is a rotational play. When do you see that cycle sort of reversing and flows coming back to India?
Look, I think some of these rotation can take a few months, to be fair. We have seen a lot of foreign investor outflows from China, particularly in the last couple of years. So it might take a while for the foreign inflows to get back into China, particularly as it seems like we are only at this early stage since the stimulus measures was announced only a couple of weeks ago.
Khoon, quick question. What is the outlook on crude? Are you long crude? Are you long gold? And also, would you buy metal stocks in India or across the world?
But we remain quite positive on gold. We believe that, despite gold hitting all-time highs, we believe there's, further upside for it, particularly given that there is ongoing strong demand from central banks as they continue to increase their official FX reserves allocation into gold. And I'm talking about, physical gold demand here, coupled with the ongoing retail demand from emerging market countries. So I think there's still, further potential upside for gold, particularly as we continue to see potential for the dollar to weaken, notwithstanding the recent rally that we've seen since last Friday. But as the Fed continues to cut rates into next year, we expect the dollar to continue to slip over, and that will provide support for gold.
Right.
In terms of crude oil, just very quickly to round off, look, we anticipate crude oil to hold up at the moment because of the ongoing geopolitical tensions that's happening in the Middle East. But as we head into next year, and if these stimulus measures from China do start to see growth, particularly domestic demand, making a comeback in China, that's going to improve and increase demand for global crude prices, which will start to see crude heading high into next year. So we are looking for a recovery in Brent crude oil prices back towards $80 a barrel by next year.
A barrel on crude, and that can't be good news for an economy like India. But Khoon, great talking to you. Have a good week ahead, and we'll speak to you soon.